Hello, welcome back to the channel. Recently, I have created a video about ETF Swing Trading where we can get the monthly income from the ETF. So I have also created that Google Sheet from it and written the strategy where we will be buying one ETF every day which has fallen the most from its 20 DMA. So this video is about the version 2 of the same strategy where instead of buying only the ETF, we will be buying the ETF, the silver and gold ETF, as well as the top 10 nifty stocks every day, one each. Say if I'm buying today, I'll be buying one ETF, that is equity ETF, one gold and silver ETF, and one stock which has fallen the most from its 20 DMA. We will sell the ETF once it reaches above 3% target, but with profit trailing. We will buy bought ETF if it has fallen by over 3% and if we don't have that ETF. Along with that, if we are buying the stocks, if it has fallen the 5%, because stocks are much more volatile than the ETF. That's why we have kept it 5% and ETF 3%. For selling, we will be trailing the profit after 3%. So that means, say for example, if we have got one ETF which has given the 3% but it is going up, we will not sell it. We will sell only if it has gone down on that particular day. So in this sheet, I have given the link of this sheet in link of this sheet out here. I have given the link of the YouTube video about ETF Swing Trading also, and I will also link the video of this one out here so that it is easily trackable. Now, say for example, if you have 1 lakh to invest, so what we will be doing is we will be dividing that to 30, and every day we will be buying one equity ETF for 3,333, one gold ETF for 3,333, and one top 10 nifty stocks for 3,333. So now I have created a sheet called top ETF per asset where I have given the equity ETF list, and where I have got the ETF as 64, and then I've also created a gold and silver ETF. I've kept 3 golds and 3 silvers, and the top 10 stocks, that is Reliance, TCS, HDFC Bank, Bharti Airtel, ICICI Bank, SBIN, Infi, ITC, Hindustan Unilever, and Larsen and Turbo. Now after that, I have created a table, 3 table, where in the first table I have given the top 20 ETF to buy based on the 20 DMA. As you can see, the Grow EV has fallen the most from its 20 DMA, that is minus 6.45%, and since I don't hold it today, I will be buying it today. Okay. Now coming to the gold and silver, the silver has fallen the most, that is minus 4.34%. Since I don't hold it, I will be buying it today. Similarly, the Reliance and Bharti Airtel has fallen the most, but since I have it, I will not be buying it. I will be buying the third one, that is Hindustan Unilever, which has fallen the after that, that is minus 4.68. So I will be buying it today. So this is how I will be buying the equity ETF, gold ETF, as well as the top 10 stocks. Now for that gold, you can actually change the values. I have the gold and silver ETF master link where I have all the gold and silver. Now if you are not satisfied with whatever I have given here, so you can change it. You can just change the ETF code and change the underlying asset, and the current market price, the percentage change between 20 DMA and current market price will automatically be added. So that you can do. Now coming back to the bought ETF, what we have to do here is we have to write the bought date here, the ETF code, the buy price, the quantity, and the investment amount, current market price, profit and loss, as well as change today will automatically be calculated. So let me delete this and say today is 13th November 2024, and I will be buying Reliance today. And I will be buying for 1100, and I will be buying for 3%. So as you can see, the investment amount, current market price, profit and loss percentage, and change today is automatically calculated. Okay. Now since I have got the profit and loss above 3% and it has gone down today, so I will be selling it. Say for example, if my silver bees price is say 80 rupees, okay, and it has gone, the profit and loss percentage is 9.6x, and if it has changed today, I will not be selling it. Tomorrow again I will see if the change today comes in negative, I will be selling it, since it has given me that 3% target. So let me move it back. Now that's it, the bought ETF all about. Now coming to the sold ETF. In the sold ETF, what we have to do is we have to give the bought date, ETF code, buy price, the buy quantity, what is the sell date, what is the sell price, sell quantity, and we have to provide the brokerage and income tax. Whatever brokerage your brokerage house is taking, as well as whatever income tax you have to give. Mostly the income tax is 20% because it's a short-term capital gain tax, so you have to give 20% on that. And then what is the total investment till that time. We have to add these values, and then this investment amount, sold amount, holding days, profit and loss amount, profit and loss percentage, as well as profit after deducting the brokerage and income tax is already calculated. Now I have also created a table where we will be getting the summary of it, that what is, how much I have got every month. So say for example, in October 2024 I have got 1400, in November 2024 I have got 2300. So this is the monthly income I am talking about. Every month you will be getting some or the other amount. You can use this amount in your day-to-day activities, like you can add it as your income, or you can add this back to the investment amount so that the compounding will take place. So that means, if say for example, if you have started with 1 lakh and in October you have got 1400, so from the next year, next month onwards, you will be buying shares or ETF for 1,14,00. Okay. Now the approx annualized also I am calculating out here. Okay. Now it is better if you don't use this money and if you add it to the investment amount, because the compounding will take place. See, I have created a video, I will just link it in the description, where getting to 1 crore is hard, but after the 1 crore is relatively easier because the compounding will take place. So as you can see, if we have an investment of 1 lakh, we might get monthly income as 2,300, 3,000. But similarly, if we have an investment of 10 lakh, we might get for monthly income as 15,000, 20,000. And think about it, if we have an investment of 1 crore, how much we will be getting? We might get 1 lakh, 2 lakh every month. That is what the compounding will take place. You will start with 1 lakh, but in 3-4 years, 5 years down the line, you can get up to 10 lakh. Again, after 5-6 years down the line, you can get up to 1 crore, because that's how the compounding works. But after 1 crore, it is relatively easier, because you will get to the 2 crore in 2-3 years. You will get to 3 crore in another 1 to 2 years. That's how the compounding works. So if you are starting with this strategy, try to add this monthly income back to the investment amount and let the compounding take place. So this is the strategy all about. So let me know if you have liked this strategy, if you have any suggestions about the strategy, or if you like to know more about this strategy, do comment. Here I have given 1 lakh, but this can be changed according to your investment. It can be 30,000, it can be 60,000, it can be 90,000, or it can be 3 lakh also. So based on that, the amount will change for every ETF buy. Okay. So please like, share and subscribe the video if you have liked it. If you have any suggestions, or if you would like me to go through any other strategies, do let me know in the comments. Thank you.